think we're going to go ahead and get started. So I will formally say good afternoon to everybody. I hope y'all doing well. Good. Appreciate y'all coming out. It's Small Business Week. I get excited about Small Business Week. I mean, Small Business Week is one of the many opportunities where people across the country are encouraged to shop local, which is really important. That's something that we oftentimes don't do, even through Amazon or whatever platform you may get an opportunity to do it. It's just a great chance to go to your local store that's locally owned versus going to big boxes. Sometimes you realize that can be a little bit more challenging than you think it is to get some of the goods and services that you normally get. So we're going to jump into it. So this session that you are going to hear today is about business planning strategies and tax secrets. I thought that I laughed when I saw that name. I was like, tax secrets. I was like, that's cool. I was like, but at the same time, I started thinking about all the TikTok reels. So we'll get into that later. But but cool. My name is Reginald Smith. I work. My day job is I work for Regions, the SBA banker there, and I'll be moderating your panel today. And so what I would like to do is have our two panelists introduce themselves, their organizations, and kind of tell you a little bit about themselves. So, ladies first.
Of course, always. All right, hello everybody. My name is Renee Price, and I am the founder of Work Smart Solutions. And so this is a consulting firm where we help small business owners start, grow, and scale their businesses. And we do that through offering different resources such as virtual assistants, tax planning, tax preparation. I do what's called a blueprint. What I find is a lot of small business owners, when you're just getting started, they always say, no one tells me what to do. You know, you have this great idea, this great product, this great service, but you really don't know what to do. You don't know how to go about it. You don't have that 1, 2, 3, 4. People just kind of give you work hard, trust the process. They give you a few tips, but not exactly what to do. There's a lot of gray areas. So that's what we help people with. Our sister company is We Do Taxes. And so this is where we help small business owners and individuals with their tax preparation, tax planning, any type of amendments, anything dealing with preparing your taxes. So I'm excited to share these tax secrets with you guys today.
Good deal. And Mr. Tim.
Hey, good afternoon. My name is Tim Clay. The business name is Insiders, Inc. When we incorporated a long time ago, it was accounting and business consultants, but the younger people in our organization said that name was too unwieldy now. So we're now Insiders. We've been there about 3 or 4 years now. But we're actually right down the street, one location, little gray building. Used to be a public accountant in there. That's what drew my attention to the building. But out of that building, we do mostly bookkeeping, taxes, small business. So we have a fair amount of small business clients that we work with out of that office. We have another office in Midfield that's really like retail tax. Mm-hmm. So we basically see those people once a year and maybe have a Schedule C, but mostly just W-2s, 1099-Rs, retirement. So we've kind of got a
now I'm going to set the stage for how this conversation is going to go. He said something, and I'm going to act like I know nothing about what he says this entire time. So could you tell them what a Schedule C is, please?
Schedule C is the schedule that you fill out if you are what's called a sole proprietor or a disregarded entity. If you are an LLC, but you haven't elected to file some other way, you will file Schedule C. And Schedule C has some good things and bad things about it.
So this is going to be great. I already feel it. This is going to be really good. So what I'm trying to gather and trying to help set the stage for is this is going to be a very open conversation. It's not scripted. I have some notes that I sent them because I didn't want them to be completely off guard about what I was going to talk about. But I do want you all to be able to chime in because you came here, you registered for a reason, and there's something that you wanted to gather from being here. So our purpose is to make sure that you get that information and hopefully more than what you came for. So I have a really quick question before we get started. Who has been in business less than a year? Raise your hand. Perfect. Who's been in, okay, good. Who's been in business 1 to 3 years? Okay. And 3 to 5, more than 5. Good. Okay, great. Good. So we got a kind of a mixed group. So that is very helpful. I think this conversation is going to be very productive for that. So let's start kind of by setting a baseline for our conversation. So we have 2 different sides of the spectrum. We have 3, really, I call it a 3-legged stool. And so in the world of getting your taxes done, which is what most people say, I need to get my taxes done. So we're going to talk in that way. I need to file my taxes. And the way of going about doing that, you normally do it one or three professionals that you begin to engage with: a tax preparer, an accountant, or a CPA. Those are generally, there may be others. However they go about naming themselves, that's the categories that they normally fall into. And so describe for us the role you feel an accountant or a tax preparer or a CPA plays in the startup one, and then kind of along the journey of the business. And so whichever one you would like to start first.
I'll start.
Okay.
Because small business owners would typically start with me first before you go to an accountant unless you can afford it. So a role that I play as a tax professional, when you're starting your business, one of the things that I find a lot of small businesses struggle with is financial organization. So when you first start your business, you're all over the place. You didn't even know that you were supposed to be saving your receipts, keeping up with your mileage, keeping up with all these deductions. And people are so misled on what they can deduct, what they can't deduct. They get so much anxiety about it, or they have just this bag of receipts. It's a mess. So having a tax professional that knows what they're doing is very important. And then also having a relationship so that you can be able to talk with them throughout the year and throughout your business, because I find that people start planning for taxes or worrying about owing when it's tax time. And that's not the time you need to do it. We need to start now, which is something called tax planning, which is different from tax preparation. So the relationship that a tax professional has with a small business owner is a very important one that you should have. That way you know what you're supposed to be keeping up with, how you're supposed to be keeping up with it, so they can guide you on how to reduce your tax liability. Because once you start making money, you may owe, and everybody doesn't want to owe. But if you're making money, you're going to owe. So there's just different plans and strategies around that we can help you with.
Mr. Tim, same question.
It's interesting as I listen to Renee talk. I mean, she calls herself a tax professional, but really, to me, the boundary between an accountant and a tax professional can be kind of blurred. I mean, because she's like, well, I teach them about QuickBooks. Those are the kind of things accountants do. You know what I'm saying? And so usually when I think of a tax preparer, I think of someone that just does taxes during tax season. They might be more individuals. To me, if you're doing a lot of business, then you probably are kind of starting to get into being an accountant.
Okay.
And you're starting to advise on how to set up your books, tax strategy, tax planning, that kind of stuff. CPA, really, the whole purpose of a CPA is the audit.
Yeah.
Our reviews, our compilations. Really, you don't need a CPA for that. You can get an accountant for that, unless they're asking for a CPA. But a lot of times people say I need a CPA, but they don't necessarily need one. They could do the tax preparer or an accountant. So
look, I have 2 things I want to put a pin in. Because we talk a lot about tax liability, and we talked a lot about owing. And so, there's a thing that we want to get refund on check. We want to get income tax check, right? That's a thing. And we have to be honest about that. I think when you're going about your tax planning, which is the technical word that we use, or you're just going about how you're going to file your tax returns in general, whether you're going to do it personally, which is what Tim mentioned earlier, which is a Schedule C, meaning that, hey, I'm a person, I have a social security number, I have a birthday, my business is a person, I've set it up, it's an individual, whether it's a sole proprietorship or an LLC, but it's going to have its own page on my tax returns. And then that flows over to whether or not I make money or not. And so what becomes very common is you have individuals who may not have an actual job outside of their business or kind of side hustle or whatever the case may be, and they're filing it on their taxes, but they still find themselves in a situation where there, and we're kind of teetering on little tax secrets here, but they find themselves in a situation where they don't want to pay on the personal side so that they can still get this refund. Kind of share your thoughts around that, because that's a very common thing that I see, and I get that a lot. I get tax returns all the time, and it's like, oh well, I made $30,000, or I made $100,000, and then you reported a loss on your business on your Schedule C, and then that rolls over to you as an individual, and now you don't have a job. You probably, in some cases, some people go and get unemployment, and amongst other. I told y'all this was gonna be, bless you, this was gonna be a real conversation. So we end up in that situation a lot with business owners, and so is that a strategy that we should be striving for, or kind of what advice do you normally give individuals when you see them in that constant cycle where you're seeing that when they come to you?
That I'm so glad that you said that, because that was one thing that I really want to make known to the business owners in the community. I see so many tax returns that are not profitable or bankable, all because you didn't want to owe, right? You're like, oh, I made this money, but then you wrote off everything in the kitchen sink. And then you try to take it to the banker to get some money. Nobody's going to give you money if you're not making money. So make up your mind. It's a decision you have to make as a business owner on whether or not you're going to have a hobby or a real business. If you have a real business, you're making money. You're paying yourself properly. You might have some employees. You might be doing some 1099. You might even be giving out retirement. But you have to structure your business properly so that you can do these things. So I'm going to stop there. I'm going to let you go some more into it, because I get passionate about it. I'm like, why do you have this ugly tax return?
Yeah.
I mean, I actually got a refund this year. And
Congratulations.
I was filing. I wanted to file fast. I got it in on time. So I understand. I mean, everybody likes to get a little money from Uncle Sam, although usually it's your own money you're getting back.
Exactly.
The only people, if you got like what they call low income tax credit,
Right.
then maybe that's money that they're giving you.
Mm-hmm.
And really what you talk about, a lot of people, I have clients that are like, well, I need to get a refund. I had a guy the other day that I worked with, and he was like, well, I'm not getting a refund. I was like, well, you didn't pay anything in.
Right.
And you're not really showing much, you know what I mean?
Yeah.
So the thing is, and especially if you want to borrow money or find investors, they're looking for what?
Profitable.
Cash flow,
Right.
profitability.
Right.
They want to see where you're making money.
Right.
So it kind of gets into estimated taxes, which I suggest for people that, maybe is a way to
Say more about that, because I'm familiar with it, but talk more about estimated
taxes are a way of paying for 23. I would pay taxes in 23 ahead of time. And so if I know that, okay, I made $30,000 and I'm going to owe, $3,000 at the end of the year, then I'm going to pay $750 a quarter.
And there's a tax chart that the IRS comes out with every year. I tell all my clients about it. So if you know how much money you're making, you can go on there and you can see what your projected tax liability is going to be. So you could go ahead and start making those estimated payments.
Yeah, that's good insight. Yes.
What, can you pay them per quarter?
Mm-hmm.
Because we ran into that last year when we owed, and our accountant or the tax provider, she said that we should start doing it quarterly,
You can.
or at least taking something out, reserving some of that money so we don't owe as much at the end or the beginning of the year.
It's a part of tax planning, absolutely.
How do you, could you all speak really quickly, one of you, just to would you go about doing that to make that payment?
I mean, probably the quickest way is go to irs.gov, set up an account,
Everybody should set up an account.
and then just, you can say what it's for. You can do it for back taxes. You can do it for estimated taxes.
Great question. Thank you. So let's talk about this. So we kind of jumped in, but I do have a thought, because I know we have different individuals in different spaces of their business life cycle. What's the difference? A sole proprietorship, an LLC filing as an S corp, and a corporation. Kind of, I feel like business owners they get stuck there sometimes. Like they're at the beginning of their life cycle, and they're like, well, I don't know what I should be. Should I just start, or I'm already a sole proprietorship, but should I be an LLC now? And Then I saw a video that somebody said that I can file as a S corp if I'm an LLC as a corporation. So let's speak a little bit to that entity structure. And is it as important? Is it as big of a deal as sometimes we make it? When does it really matter, and kind of how? If you would mind speaking to that. Then I'll start with Tim.
I mean, if you got a startup and you're kind of like in your house and you're kind of figuring it out, I'd say you probably don't need to do an LLC.
Okay.
You know, I'd say keep it simple. I usually say 50 to 100,000. If you're grossing that, you may want to consider setting up an LLC.
Okay.
You know, and I guess the thing is, we've talked about sole proprietorship, which is where you and your business basically are the same.
Mm-hmm.
When you form an LLC, then that LLC is a separate entity, separate from you. But the IRS says by default, if you are a single member LLC, you have to file as a sole proprietor. So by default, if you are an LLC single member, you still want to file with the Schedule C. Okay, by default, if you're a multiple member, meaning you have more than one, you have to file as a partnership. And so then the other thing that Reggie talked about is an S corp. The S corp is where you're filing a totally separate business tax return. And it's probably one of the more popular structures for small business, because the S corporation does not pay tax, but whatever profit or loss that the S corp has is going to flow through to whoever the owners are.
Mm-hmm.
And the corporation now is something totally different, because the corporation is, again, a separate tax return, but the corporation pays tax on whatever profit or loss it has. And the only way you're going to get money out of it is either by dividends or by payroll. You can't just pull money out of a corporation. You got to really pretty tight keep it separate.
That means that you actually work there. You work a job, any other job.
Pretty much.
Like it's and when I mean that in a sense of, I think sometimes business owners will look at their business differently than they would look at working at another place, for lack of better words. Like you should, if you're setting up a business structure, you would pay yourself just like anybody else would pay you, right? If you work for a corporate entity, you would get a check. Now that may look different, but in a sense, the nuts and bolts of it are very similar.
I mean, we have an S corp. I've been on payroll. I've been on payroll now, but I've been on payroll most of the time,
right,
since, like 20 years from my own company.
From your own company.
Because I don't want to pay estimated taxes.
There you go. And so if you could, yeah. And so, same question. You have anything you want to add?
I deal a lot with sole proprietors and LLCs,
okay,
and I do get that question often, like, well, when should I be an S corp? I keep it simple, just like he said. I don't really recommend it unless you're making over $100,000. You're trying to give out W-2s, you're trying to do a little bit more than what you're doing now, then you might want to look into moving over to an S corp.
Good deal. So let's talk about I think a lot of people talk about growth of their business, right? People I want to grow, I want to scale. And a lot of times when I start thinking about people growing and scaling, you start thinking about adding employees. You may not have those. You may just be you. It may be a husband and wife team. It may be a few people in the beginning, but like, hey, we need some help. And I'm not doing those things. I am a sole proprietor, and I'm using my tax ID number. I mean, my social security number. I may not even have a tax ID number. When we start to go down that road and say, I want to grow, I want to scale, I want to build my business, what are some thoughts that business owners could have in mind, or things to be able to be thinking about as they travel down that road of thinking about bringing in more revenue? Hey, I'm gonna get a marketing strategy together. I need to hire some people. Are there things from a tax side that need to be considered when you start going down that road?
So again, I would speak to being financially organized. having your QuickBooks and things in place so that you can see where your money is coming in and coming out, making sure your business is structured properly, especially if you're going to be looking to getting funding from banks and different other places. You have personal credit, you have business credit. So having your business structured properly is going to definitely play a role in that.
Follow-up question to that. Say I'm not, quote, structured properly. Say I'm a sole proprietor and I found this often, and they'll say, well, do I need to change my entity type? Like, is that something that I need to change now? Say I am a sole proprietor and I need to go to and become an LLC and register with the Secretary of State. How do I go about doing that, or is that even necessary when I get ready to make that transition?
If you want to change it over, it's just an amendment. If you want to change it over, it's not a pretty lengthy process. I believe it's like $100, and you'll just pay and you'll just change things. Some of the things, when I say not structured properly, I've found that when you use your home address to apply for some types of funding, it can hinder you.
Yeah.
So I have to re-instruct my small business owners to get something like a virtual address so they're not judged based on having a home-based business. Some people might not want to lend to you because you have a home-based business. Another thing is having a business phone number. Go ahead and buy the domain name. It takes money to make money. So if you're going to start a business, you need to have some money set aside so that you can do the things that you need to do. Another thing is your addresses and phone numbers not being correct. So when someone Googles your business, what shows up? Because go ahead. Oh, everybody's agreeing. I'm like, yeah, when someone Googles your business, what shows up? So if you're going to the SBA and or whoever and you're trying to get a loan from them, you need to show up the same way everywhere. Your phone number needs to be the same. Your address needs to be the same. It doesn't need to be your home address. Another tip that I give people with your virtual addresses, there's a few. I'll give them to you. You have Creed 63 downtown. I believe Polaris is also a virtual address place. You have Regus, Regus. You have iPostal. And if you just Google virtual addresses, you'll be able to find them. That's going to be very important. It'll save you paying the $100 to do an amendment. I know because I have 5 LLCs and I had to do that. I had someone show up at my house to get their taxes done because I had my home address when I registered my tax business. So I learned that lesson really quick. And as I progressed and scaled my business and wanted to get funding for things, I started realizing that that was a problem, that I was using my home address. Another issue that I find with funding and trying to get funding is when you get that virtual address, you want to make sure that the zip code is in an area where the income is high, because sometimes you can be rejected from the zip code being in a low income area. Now that's a hot tip because most people don't think about that, but I have been in some situations and I've seen some things and kind of did some research on it with where a person, what they put on their application and how it affected them getting that funding. So when I say structure properly, it's a lot of moving parts. But that address, that's a big key. And it's very simple to get you a virtual address.
No, those are great tips. Tim, I'm going to ask you a question. You know, we talked about businesses less than 100,000, kind of doing that sole proprietor space. And micro enterprises is a word that is kind of becoming more common for people to use, and it's really just businesses make less than $250,000 is considered a micro enterprise. I think one of the things that happened during COVID was people began to realize what small businesses really meant to the federal government, you know, and they were like, oh, it's businesses with less than 500 employees. And people were like, oh, okay, so I must be really small then. And then that's where kind of that word began to kind of emerge, that we would talk about micro enterprises so people can know, okay, now you're talking about me. So when you have these micro enterprises, and to your point, they're building out an idea, they're figuring things out, you know, I think one of the challenges that I've heard them say is that, well, what I really do right now doesn't really matter, you know, because I am so small. Like they'll say, you know, IRS ain't checking for me like that. You know, but I think the challenge with that is that builds habits. And then if you do begin to scale and grow, you have to break those habits. So what are some good habits, even though we may not be, for lack of better words, making over 250, that we can start with very early, so that as our business does begin to grow, or hopefully our business begins to grow, that we won't have to make so much of a huge adjustment as if start speaking to that business, because I feel like we had a few in here that was less than a year or so that are very early on.
I mean, basically, you'd want to have like and this is basic, so if it's so basic, I'm not trying to talk down, but you definitely want to have like a separate business bank account.
That's good.
You know, so we're working with some businesses up in Louisville, and it's surprising how many of them are using their personal account for their business. And so it's a mess. I mean, it's just a mess. Because as an accountant, how do you know what's business and what's personal? You know, so you want to have a separate business account. And I would suggest, like I tell a lot of people, there's an accounting software called Wave, W-A-V-E, Wave app, A-P-P. If you Google Wave app, it'll come up. It's free. And they make their money by payroll, or if you do merchant services, they're going to charge you for that. But you can connect that accounting software to your business bank account. You can pull in all your and try to use your business bank account for all your transactions. You know, and if you're going to take some personal money out, just transfer it out maybe to your personal account or something, and be aware that might be taxable income too. But I would say those two are kind of simple, because if you're using your business bank account as like your control, all those transactions are going in there. And really all accounting is just classification of transactions. That's all it is. You know, so you figure out how, you know, it's AT&T, that's telephone, it's rent if you're here in Polaris, so, you know, whatever, meals. And so that way you'll be able to go and look at that software, however, weekly, monthly, and you'll see in black and white what you're doing. I think the biggest problem is that people come to us in the subsequent year, they don't know what they've done, you know, and then it's like, well, why do I owe? Or why didn't I get a refund? You know what I'm saying?
Right.
So I think it takes the mystery out of it.
Yeah, I would agree. You know, I think one of the things that somebody said, and I forgot who it wasn't a world-renowned speaker, but it was deep to me at the time when I first heard it. And so an individual told me that a lot of times our business practices are evidence of kind of what we do with our personal finances. And so, I didn't think about that at first, you know, when I was starting to consult business owners and talk through strategies like this, but it's very true. And so with your personal resources, if you don't have a personal budget or some type of guiding spending plan that you go by, you generally will carry that over into your business, and it effortlessly. It just kind of won't register that you'll need to have these types of things in place, and that makes it difficult.
Well, and I think that's really an important point, because that personal budget is kind of going to be your taxable income.
Yeah.
That's what you're going to be paying taxes.
Yep.
So like if you got a house note, or you buying food, or, you know, kids, whatever, that's not business. You can't write that stuff off.
That's right.
And so if you're getting if you got a personal budget of $30,000, I mean, you might pay some taxes unless you have some kids and, you know, stuff like that.
So let's get into that, Tim. See you and open it. I was gonna wait to open that back up, but you done open it up now. So let's get into it. So this is really good, because you start to talk about a personal budget and kind of what your income is going to look like for the year. Now, a lot of times I run into business owners in a couple of places over my career. I'm working somewhere and I'm going to leave my job and I'm going to start this business. And one of the challenges that I give them is to look at their personal lifestyle today, and with that income being removed, how is that going to change, and where's that money going to come from? Because from what I've seen, they don't have a plan to replace that income, and then when life happens, not if life happens, that money automatically comes from the source of income, and that source of income is now the business. So, Renee, speak to speak to your client who you've seen in that situation where their income is now what they're making from the business, and they really they're having a hard time separating the two and building, saying, hey, this is how much I'm gonna give myself, and the rest of it I'm gonna use for the operation of the company, and how that dynamic, how that dance should kind of look, or your advice on that.
That's very difficult. I actually run into a lot of small business owners that are there, especially those that get the urge to just quit their job and just start their business. And I will tell you that you better keep that job until you have saved a certain amount of money so that you can continue to live, because it ain't nothing like starting a business and every time you make money you got to spend it because you are living and surviving off of every single dime that you make. It is extremely hard to grow that business, and I know from experience with my first business, everything that I made, I made the business to take care of my kids. So everything that I made, I had to use it to pay bills, buy food, put gas in my car, and the business could never grow. I had to go back and get a job. I had to go back and do something else, because where are you going to get the other income from? You have to have the income to run your business. It takes money to make money. And if you have to, keep a job, get something else going, but you got to have some more income coming in, because if not, your business will never scale and grow if you are spending every single dime. And you have to be disciplined. So when your money does start coming in, let's say you made $1,000 for the month, okay, you can't go spend $900 on your bills. You got to put some money back into the business. And it's also very important to pay yourself. We don't pay ourselves as small business owners.
Agreed.
We don't. And it'll make you feel a whole lot better if you made $1,000. You pay yourself something. Pay yourself at least $100, and then document it. And document everything you paid someone else. You pay somebody over $600, give them a 1099. My mama, if she still filing taxes, she would get a 1099 from me if I paid her. Don't let that money go. That's a tax deduction. So you can pay yourself, you can pay your workers, you can use it as a tax deduction. But as small business owners, they don't think that. But as far as where you're going to get the money from, you're going to have to get it from somewhere.
No, that's a real conversation that you have to have with yourself. And you should also have a team of individuals that you're talking with about that, because it's a real thing. No ifs, ands, or buts about it. It's not going to miss. It's not going to not happen. You're going to start a business. You're going to leave your job because you feel like, I don't have time to do both, and something's going to happen. And you're going to have to make a decision on where you're going to pull that money from. Yes, sir.
What would you say a good target to aim for when you save enough cash to leave your job?
So,
say a percentage, or what would you say?
Renee?
So I would look at how much money you're currently making a year. I would add up your monthly bills, right? And you need to have that saved up at least for 6 months or a year. If you don't have that, it is insane to quit your job and start a business. And you can do it. People do it. But it is just
And they put it on
difficult.
TikTok. They put it on.
It's difficult.
TikTok.
Because you have this great idea, this great plan. You're motivated.
I quit
everybody's
my job.
and I'm gonna quit my job. And in about 30, 60 days, you might be looking crazy because that product or service that you got, people, they might not buy it like they need to, so that you can do what you need to do.
And the other side of that, did that answer your question? Do you have a follow-up question to that? Okay. And the other side of that, we're laughing, but the other side of that is real, because you have to account for the fact that even though you may be generating revenue, and it may take off, to your point. So you may have people not buy it. It may blow up and it may take off, but that still doesn't mean that you get to support your lifestyle off of that money. Reinvesting in your company is huge. And I think a lot of times entrepreneurs don't account for that, or aspiring entrepreneurs don't account for the fact that I'm going to have to reinvest this money into this company. Because if you don't, then you end up coming to talk to me. And one of the things that I'll tell you about lenders, because this is free, that wasn't on there, for lack of better words, but one of the things I'll tell you about lenders is that we don't like digging you out of a hole. And so I tell people that all the time. They'll come to me and they've dug a hole. Man, I tried, the business is growing, I'm making all these sales, things are going great, but I had to buy some stuff on some personal credit cards, and I'm behind, and I owe this person, and I just need $10,000 to get me back to where I need to go, and then I'll go here. Well, really, the difficulty with that is that there's nothing that shows me at that moment that you won't redig that hole, unfortunately. And that's how we see it on our end. And I'm just fair enough to tell you that. But we don't see, like, if you dug that hole once, you'll dig it again, because it becomes comfortable, because you're trying to grow this business. And so that's very important to know, that I need to make sure that I keep everything covered for the business, because it is a separate entity. It is its own person. Yes, sir.
Can you give us specific examples of how you can reinvest the revenue back in the company?
Sure. That's a great question. Which one? I want to take that question. That's a good question.
And actually, I was kind of thinking about something right along those lines, which is, and this is kind of off topic a little bit, but to me, even personally, you go to a financial planner, first thing a financial planner is going to tell you, you got to have what?
A budget.
A budget, and then what else? An emergency fund.
Emergency fund.
One of
yeah.
the first things they're going to tell
Yeah.
you,
Yeah.
even if it's $1,000.
Yep.
5,000, whatever.
Yep.
And the same is really true for your business. You know what I mean? Your business should have some kind of reserve.
Mm-hmm.
You know, so I would say that first of all, and then I guess secondly, to answer your question, maybe if it's some kind of capital need, maybe it's for working capital, you know, like operating. But to be honest, if you're running your business to the point where you have excess revenue and you have a reserve, that's probably when you want to go to see somebody like this and use his money. You know what I'm saying?
Yeah,
Yes, sir.
I comment on that. I'm a financial planner and business consultant. So typically, when we work with small businesses that are looking to grow, you know, sometimes we butt heads with CPAs because, like they said earlier, from a write-off perspective, when we know 5 years out you want to go grow your business, writing off all that profit doesn't do you any good.
Yeah.
And so when we think about growing the business, when we take a look at your financial statements, we want to project.
Yeah.
And I think for y'all as business owners, you need to understand your financial statements, and you need to be able to project your revenue, where you want to be, and what it's going to take from a cost perspective to get there.
Yeah.
Because if you don't understand that, then you're not going to know where to invest. And a lot of times, business owners come to us and say, well, I went and acquired property, or now I've got W-2 employees. And you look at their financial statements, and now they're cash strapped. They were operating perfectly fine without all of those things beforehand. And so I think a lot of times there's a rush to grow your business, and that's not always healthy. And so it's trying to find that balance between what are your revenue drivers, where's the biggest ROI on your investment. You've got to understand your financial statements to do that. And so either finding an advisor that can help that. There are CPAs that will help you do that. You got to have an advisor team at some point. And that's typically where your biggest ROI is early on, is finding advisors that you trust, you're going to do 20 or 30 years of good business with.
Listen, there is thank you for sharing that. There are a lot of resources floating around, and hopefully this week, as you engage in different sessions, you'll learn about the Alabama Small Business Development Center Network. You'll learn about Ignite Alabama. You'll learn about all of the different resources that are all the different resources that are around, that you can just go and pick people's brain, because that's what you, as a business owner, one of the things that I think, tell me your name, sir. Tyler. One of the things that Tyler stuck out to me is having an advisory team. You got to find people that are willing to invest in you. Sometimes those people are going to be contracted or people that you pay. Sometimes they may be a person that you meet through networking events or whatever the case may be, and they're just somebody that takes a liking to you, that says, hey, just hit me up if you have questions. And you're able to reach out to them and spend an hour with them or have a 30-minute conversation with them. Because when you started your company, you didn't start your company after you went to school to be an accountant. You didn't start your company after you went through all of the continuing education to be a CPA or whatever certifications and classes and experience of life that you had to go through to be a tax preparer. That wasn't on your radar. You had an idea, you brought it to the market, you start making money, and you continued. Now, everything else along the lines was like, I'm not really sure how all the rest of this works. And so you have to build some confidence in some people, and that requires you to be vulnerable. And that's one of the biggest things that I've learned with entrepreneurs is that it's like having a new baby. I know about that's my beautiful wife back there, Miss Brittany. And so she when our kids were little, I ain't let people touch my children. I did not. They were like, you know how people used to joke about Michael Jackson kids, like they never seen them. They were like Michael Jackson kids. Like they had covers on their strollers. Like I would walk around like you could not touch my kids when they were small because you got germs and you got a bunch of other things and I don't want you touching my kids. Well, that's the same thing we do as business owners. We don't want people touching our baby. We don't want people telling us how our baby look. We don't want them doing none of that because it's our kid. It's our idea that we're bringing to the market. But one of the best things that you can do is to allow someone in that you feel confident with, that has your best interest in heart. And sometimes that's going to take a little risk. You might run into somebody that, you know, you be like, man, I thought I could rock with this person and it didn't work. But that doesn't mean you stop. You're going to have to find, there's other people that can help you in that space. One of the things that I wanted to ask Tim to mention that Renee brought up was that if you pay somebody, that relationship between having contractors in the business, somebody that you don't employ, but they do something for you to take care of another client, and the paperwork that goes involved with that so that you can properly track that and use that as a write-off. I think that's a big missed opportunity for a lot of entrepreneurs when they're starting small and they say, hey, well, I did a job, but I got such and such to do this for me, and I just gave them the money. There was no, W-9 given or anything. That was just, I just paid them, and then as it comes back, it may be a little challenging from a documentation perspective. So could you speak to kind of that process of if I'm going to have other people in my business helping me, how should I go about, what processes should I have as a business as I'm starting to engage other people to pay them?
Okay, that's a pretty loaded question. Well, in the sense of that, state unemployment offices are trying to get money. So they're trying to classify contractors as employees.
I led you in a certain direction. I did.
They're trying to. So if you have, I think the IRS has like a 20-point thing that says, if you control what they do, they come to you every day. If you're providing all their tools, if they don't work for anybody else, it's a whole lot of stuff that they give, then they're an employee.
Right.
And some industries kind of get away with it. I guess almost all of them get away with
Yeah.
it. But some industries tend to use more contractors, like construction.
Yep.
So it depends. But if someone works for you and you're just paying them straight, you're not withholding any kind of taxes on them, loosely, they would be considered a contractor.
Mm-hmm.
If that contractor makes over $600, you're supposed to give them a 1099 at the end of the year. And in order to do that 1099 correctly, you want to give them a W-9 when they first start. Because if you get to this time of the year and say, hey, give me your social security number. It's
not
going
to
pick up the phone again.
It's not going to happen.
Yeah. So the process is if you got somebody that's going to be a contractor on the front end, you give them a W-9. And we have like a independent contractors agreement. I'll give you a card. You can use this. It's kind of like a generic form that says, okay, you should have your own not driver's license, have your own business license. You're responsible for paying on your own taxes, and you are an independent contractor. But if someone is coming to your work every day answering your phones and you got them as a contractor, that's going to be a problem. An independent contractor agreement, give them a 1099. That's not going to shelter.
Yeah. Great. Yes.
And let's piggyback, and I had to look at my notes right here about the 1099. And you can correct me if I'm wrong. A 1099 form must be given by January 31st. It paid the contractor more than $600, right? Okay. Now, if I pay via cash, check, or Zelle, do we have to still issue that 1099?
If you paid them over 600, yes.
Okay. What about if I pay via PayPal, Venmo, or Cash App? it's still,
If you pay like $600,
it still have to,
Because they're not giving those out yet. I think they're supposed to start this year, but you know.
okay, that was
Yeah.
something.
Yeah, next
Yeah.
year,
Yeah.
never.
They keep changing it.
So,
Yeah.
1099 and the 1099K, is that the,
Those are different.
1099K is like for merchant transactions.
okay,
You know, so like if you're using a merchant service account,
Mm-hmm.
Stripe or somebody like that, they're gonna give you a 1099K that says, here's all the credit card transactions that we took in for you. And they usually have it by month, and they give you a total.
right,
Yep.
okay, okay.
Yep. Cash App's doing that too.
That's where I got into it, but I noticed like with my Cash App, I was paying the individual through my personal Cash App. We don't have a business
I got you.
Cash App, so, but was that fine? We did issue him a 1099.
Yeah, you have the proof through the Cash App that you've been paying them. You just add that up and
Okay.
make your 1099 for them.
Okay.
Great question. Yes, ma'am.
I know you were the last question, so I am the like social media finance guru follower. And so, at one point, I had a home that I was renting, and so like, okay, we should start a business off this. And then I would hear different people, and even other business owners say that you could do things like purchase a truck or things like that for write-offs. Can you kind of speak to are there parameters around if you're a sole proprietor? If you want to, like, hey, if I have rental businesses, I can buy a truck and write that off, or I can write that off. Can you speak a little to that?
You can definitely write those things off. That's very popular. People wanting to write off their
How many
their
pounds,
vehicle.
how many pounds is it? You know, everybody know the pounds nowadays. How many pounds is it? It's 6,000 pound vehicle.
Ways that you can do it. Depreciation is very popular. You can depreciate it over the years, and I think this year you could depreciate it all at once if you wanted to. You want to add more to that?
Yeah, and I would just say that like, well, you got two methods when it comes to vehicle. You can go with mileage, or you can go with actual expenses.
Yeah.
Actual expenses tends to always be higher, but there's just more paperwork, you know. So, but the mileage is going to always be like the driver, because unless you're using, and even if you are using that truck 100% for business, you have to have records that show that. You know what I'm saying? So, and for actual expenses, let's say if you're using that truck 75% business, you'd be able to write off 75% of the depreciation she's talking about, 75% of your gas, your repairs. If you have a note, 75% of the interest, 75% of the depreciation. You know what I mean? So keeping track of mileage with vehicles is kind of key to how much you'll be able to write off.
Good deal. Cool. So, really quick, anybody have any questions? Yes.
I had a question about the business credit. When you're seeking business credit, what are some things you need to have in place? As far as like, you know, a business bank account, revenue, stuff like that. What are some things you need to get approved?
Everything you just said is what you need, and having your business structured properly. If you're doing invoices or using something like a Square or a PayPal or something like that, you just need to have your business organization correct. Okay. Another thing, I know I mentioned business credit. It's a really popular topic right now, but in order to have good business credit, you have to have good personal credit. Okay, there's no way around it. Stop looking at these TikToks. Okay,
Please.
there's no way around having good business credit and getting approved for this $100,000, $200,000 when
Please say
your
it
personal credit. And I know you see the ones they're like, yeah, you can get $100,000 no PG, which means no personal guarantee, which means they're not going to look at your personal stuff. They're always going to look at your personal stuff. Okay, so if you want more business credit, then you need to fix your personal credit first.
We're going to stop right there. Hold on one second. Hold on. Follow-up question. Yes, sir. Go ahead.
So when you're fixing your business credit, with your personal credit, what is that minimum score you're looking for to approve somebody for the first line credit?
That depends on who you're seeking your funding from.
Let's say if it was Regions Bank.
See, he done started something. So here we go. So I'm good at this. I'm real good at this. So my answer does not reflect anything as it pertains to Regis Bank, because this is not a formal Regis Bank conversation, but I am going to give you a really good answer. So, minimum credit score, I'm going to tell you two things. One, never lead with that question. Never go to a lender and ask them what the minimum credit score is. I'll tell you why. When you tell a banker or a lender the question, or you ask the question, what's the minimum credit score requirement? It automatically puts me in the mind that that's a red flag. Okay? And I'm just keeping it a buck with you. I've been doing this 11 years. I'm gonna just be real with you. 97% of the time when somebody asks me that question, I find something around their credit that is going to make it a hindrance for them to be able to get the loan. Most bankers already think that. So when we talk about bias, and it is real situations, and it's in your banker relationships a lot of times where that bias becomes, because when I see you, if I don't think that you have your stuff together, like Tyler was talking about financial statements and all that, and if I start talking that language to you and you start looking like a deer in headlights and you don't know what I'm talking about, and then your next question is what the minimum credit score got to be, I'm probably not going to spend a whole lot of time after that conversation. So that's tip number one. Tip number two is that you want to find kind of where you want to go first before you start really thinking about that. Like, what do you need capital for? Right? Do you need a line of credit, which are kind of at the top tier of things that you can get access to? Like, those are the hardest to get access to. And a lot of times we think, well, I'll just go get a line of credit. That's like the hardest thing to get, because it's just an open-ended line. And the bank has to account for that entire dollar amount. So it's not like we're looking at it like, oh, well, we'll give them a $50,000 line and they may only use 10 and then they may pay that back. And then, because that's how you're thinking about it. But in our mind, we're like, if we open this line up, they're going to use 50 tomorrow. And then they may not pay us back. So what happens in that? So we run what's called stress tests. We are worst case scenario people. And that's not fair to y'all. But unfortunately, it just is what it is. That's what we do. We think of like worst case scenario. Worst case scenario, you get this loan and you don't pay us back. Okay, I'll just crank the interest rate up. You see what I'm saying? That's how these things begin to happen. So I feel like at least if I make my money, I'm going to make my money back off of the interest that you're going to pay me for the few months before I charge it off and write off the bad debt. So think about where you want to go, who you want to borrow the money from. Do you want a term loan? Meaning that X amount of dollars over X amount of time? Do you want an open-ended line of credit? Let's figure that out first. You have a better success rate with borrowing money with something that's fixed to something. Equipment. Say you want to buy some things for something. You have a higher success rate for that because I can come get it. I don't want to come get it, but I can, right? Versus if I just give you dollars. Because a lot of people be like, well, you could just have this truck back. I actually don't want it. Like, you driven it, I don't want it back. Like, then I got to take it and I got to sell it. I really don't want to have to do that. I want to give it to you, you pay me, and then life goes on. But if that happens, I know that I have something that's tangible that I can come get. That makes me feel a little bit better as a banker. But when it's just nothing money, which is what I like to call it, that's nothing money. And I'm sorry, this Small Business Week, we call it working capital. Okay, so if it's working capital, then we're a little less excited about working capital because you have to get very granular in that moment and tell me exactly what you want to use it for. And a lot of times people can't articulate that. So you have to become very specific, like, hey, here's a cart from Amazon. This is exactly what I'm going to buy. I'm going to buy these 6 things and I need X amount of dollars. That makes me feel a whole lot more comfortable than you just telling me you need blank 5,000 X amount of dollars. And once we decide that, then we can kind of look around and see where we need to get that money from.
Is that something that, like, Renee, you as a consultant would provide guidance on, like, based on revenue and kind of where business is, the type of institution that individual should go to?
Yes. We also have different resources and partners that provide funding for different credit scores. So we have a wide range of partners that we work with.
Cool.
Would it also be helpful?
Go ahead.
I was just going to say, would it also be helpful, I used to be a 15. So one of the things that I would do is have the person to bring their budget to me, so I can see what all their debts are, and look at what the cash flow is going to be,
and then to look to see if the loan still makes sense.
Mm-hmm.
But I also did a lot of counseling because I did do loans for people who did have these very expensive, high rate payday loans. And I went through an analysis of their application, because one of the things that does give you more strength is if you've been at the same location for at least 2 to 3 years. If you've been there 10 or 20 years, even if your credit is low, then I had greater comfort as a lender that I could find you.
Mm-hmm. Yeah, no, that's good. We had one last question. Thank you. Yes, sir.
Just going back to the business entity.
Okay.
I heard somewhere that it would be beneficial in some cases for a single owner to file as a disregarding entity as a LLC.
That's a Tim question.
I mean, a disregarded entity is the same as a sole proprietor.
Mike, Tim.
It's the same.
Tim.
So, and that's what the IRS says is the default.
Great question. Look, so yeah, thank you. I was trying to get your attention. So this has been great. Tell the people how they can reach y'all, please.
So you guys can reach out to my Instagram. We have WorkSmartBHAM. We also have info@worksmartsolutions.com. If you want to send me an email, you can give us a call at 205-315-3345.
Mr. Clay.
Yeah, 205-425-9000. And I have some cards too. I'm still old fashioned, I guess.
No, that's good. Well, look, this has been fantastic. Thank you all so much. You did a great job. I appreciate y'all.
Thank you.
And so that's our time.